Today to urge New York City's largest banks to reform their loan modification policies so that they are more responsive and effective for families facing foreclosure. There is often an absence of incentives for banks to help homeowners in trouble. Now that's clearly reflected in inadequate customer service that homeowners receive, unreturned phone calls, misinformed bank representatives, paperwork that gets lost and must be resubmitted time and time again, and frustrating red tape and delays that are just some of the many obstacles that have faced the struggling homeowners trying to modify their loans and stay in their homes. More New Yorkers are concerned about the impact that a potential foreclosure could have on their credit and futures, and more New Yorkers worry about where they and their children will sleep next night. These challenges won't solve themselves, which is why we've come together to call on banks to stop this loan modification merry-go-round. We are reaching out to JP Morgan Chase, Citibank, Bank of America, HSBC, and Wells Fargo to answer key questions about the modification process, including what efforts they are undertaking to respond promptly to customers' requests and inquiries about loan modifications, to pause foreclosure proceedings while the banks evaluate the borrower's eligibility for a loan modification or other foreclosure prevention option. And what are they doing to expedite the loan modification process itself? All of our questions are listed in the press release, so you'll have all those details. We've asked the banks to respond by September 1st.
Modifications are critical as the foreclosure rate in New York City continues to grow. It is critical that the banks understand and start working in a more collaborative and speedy way to help families who are trying to do the right thing. These are good people trying to do the right thing, trying to keep their homes, trying to keep shelter for their family, and also trying to keep their community strong. So this is something that we're hoping by gathering here today and sending this letter, we are hoping that the banks reach out to us and say, what can we do to make this process easier for people that we know who are trying to do the right thing?
We must remember there came a time a couple of years ago when the financial community was in real trouble, and the taxpayers of this country and of this state in particular reached into their pockets and bailed out that community, because we know that we all have to survive to have a chance. And now all we're asking the banks is to remember that and to do the same thing with working people who are only fighting to keep the American dream, the dream of ownership of your own homes, and to be patient and to understand that this economy has a bad effect on all of us.
Today, TW Local 100, representing the 38,000 men and women who run our transit system, have a message for the banks. You must restructure and modify your mortgage loans following established federal guidelines so that the workers you took advantage of initially have an opportunity to keep their houses and stop the foreclosures. Because you profited handsomely, it is now a time for you to pay back the workers that you profited off of. Local 100, with a seat on the board of the New York City Employees Retirement System, considers this a criteria for future investment decisions in the stocks of the banks and associated financial institutions that our members and all of New York's working families go to for mortgages and to buy houses for their family.
It is the responsibility of people who have means, resources, know how